afternoon, World Wide Web. Happy Sunday to everyone. This is James, your favorite stock picker ticker guy on AMC, AMC Entertainment Holdings. This week we heard rumors they were going to buy out the commercial company, National Cinemedia. I don't think they're going to take on $1 billion worth of debt to get that company. If they're screwing around by buying some of their shares, that's all they're doing is screwing around. That whole company was worth $20 million when they bought 10% of it. So they bought like $2 million worth of it. It wasn't even like a meaningful purchase. And why would they want to own it and take on $1.2 billion in debt? I have no idea. I think they were just screwing with Regal Cinemas. Regal Cinemas is their biggest competitor, and I believe they also own National Cinemedia, or they are a subsidiary thereof. AMC Entertainment, I wanted to share a few insights with everybody. Right now I'm on a hunt, and I'm on a hunt for stocks that got destroyed during COVID and are inevitably going to make a comeback. There's some of them that I found that seem to be no-brainers, like Carnival Cruise Lines. They have 100% of their ships back in the water. They're doing cruises all over the world. Their boats are full right now. They're back. The only thing that's not back is the profit line. When the profit line comes back to where it used to be, then you know they're fixed. But Carnival Cruise Line has the revenue line fixed. And I looked at a lot at AMC Entertainment for that same purpose. Their revenue line pre-COVID was $5.47 billion at a net income of negative $149 billion. They made money in 2018. They made $110 billion. Again, 5.46, very predictable revenue. 5.47 the next year. Then came 2020. They shut down every movie theater. This is not AMC's fault. That's not their fault the pandemic hit. It's not their fault they closed their doors. Half the country was still closed for 2021. They lost a lot less money. They got a little bit of their revenue back. 2022, their losses are shrinking even more. $3.91 billion is their revenue. That's getting awfully close back to the $5.5 billion. Let's look at it quarterly. Let's look at it this quarter here. They're about at $4 billion. In June of 22 is $1.17 billion. So they were creeping up on $5 billion again. I would say this year they're creeping back on $5 billion again. They did have a bad quarter there. They might end up at maybe $4.5 billion. But they're almost back here, folks, to this $5.47 billion. They're showing signs of approaching 5-ish. Which would be in almost a full comeback. Yeah, they do got a little bit more work to go, but you can see it happening. You can start seeing quarters. It's very seasonal. It goes with good movies and when they come out. But the amount of people that want to go see the movies when they come out is getting right at 5 billion-ish when you look at these two quarters here, these two big ones. Big. When you look at the bad quarters when no movies came out, 800 million almost, a billion. So 4 to 5 billion-ish is where they are now. They need to get back to 5.5. How close is that? I'd say it's one movie away, maybe a couple of movies away. It's so trendy with the movies. That's when everybody goes. The place is a ghost town. If you go see something that you love that nobody else loves, but if it's opening night for something, it's the hottest place in town. Everybody says, let's go to the movies. So the quarterly loss on the last quarter, $287 million. What they're doing with these losses is not only losing money possibly, but they also might be paying off debt. They also might be winding down their final expenses of the COVID debacle. So even though business got better, even though they probably made some money, they are chunking a bunch of it at their debt to clear it out or to pay for other crap that was COVID related. One thing I wanted to show you in this video, the balance sheet, it is upside down, 9.14 billion, 9.2 billion. So they sent 10 million How much is that? They sent They sent $8 million off to their liabilities in 1 quarter. So that's a little bit of it. But here's the real number that I wanted to show you: the company's cash flow. Back pre-COVID, it was pretty darn good. Well, actually, that was. I'm sorry, this is quarterly. Here's your cash flow before COVID. About even. 2020, they didn't really have any cash flow. Back to even. 2021, they had a good cash flow. 2022, $965 million. But if you look at this 965, this was the huge, oh shit, we have to pay everything back loss. I want you to look at the way it's winding down. Starts out small, big, smaller, a little bit bigger, and then really tiny. Their cash flow was only off by $51 million in the last quarter. They're kind of winding it down, and they're kind of finding the movie houses becoming little profitable endeavors again. And that's what that means. That means that they have positive cash flow almost coming in from the business. It's negative cash flow, but it's not much negative. It's so close right now that the cash flow is going to break into the positive. And then after we see that happen, they'll probably just keep chunking up these big losses every quarter. On paper, the net income is going to be down. As they plow into this debt, they want to get it down probably quite a bit. During COVID, well, it looks like they have been slowly reducing their debt, but you can see it go up for COVID to $10.28 billion. It was $12.46 billion here. 12.46 to, oh, I'm sorry, 13.13. That was their peak. And when they were running normally, a profitable business, they were able to carry $8 billion in liabilities. So if that's what a profitable business looks like at this revenue, $8 billion in liabilities, they can carry it. Well, they're at 11.76. So they got to shed about $2 billion. So until they do that, it's going to take them 10 quarters throwing up, well, actually a lot less than that. Probably just a couple of quarters of throwing up billion-dollar losses. If they keep throwing that our way. Well, those are years, I'm sorry. Quarterly. 300 million. So it's going to take like 10 more quarters to blow out enough debt to get this thing back to being the same company it is. That's about 2.5 years. Can they survive it? Yeah, they got enough cash to do that, I think. So if they're having positive cash flow, it's going to happen. They're going to make it happen. That means they survived. And if they survive, they will pay off their debt eventually with all of their winnings, and probably have to make some changes and cut back on some staff and get rid of some crappy movies. They'll be making some changes. They'll be adding some new events. Probably be renting the theaters to local college kids or anyone they can that needs a theater. They're probably going to expand their offerings greatly. You might be able to go there and watch football. I have no idea. Drink beer and watch football. That's what Regal Theater is doing now. They're doing UFC fights. They sell beer, they sell liquor, and you can watch UFC fights from your stadium seating. It's kind of cool. It's like $50. It's I guess is the same price as the renting it at home, except for it's $50 a person. So they do quite well probably with those nights. Hopefully AMC will chase the same model a little bit. It seems like a good night to fill up. But I see some improvements in their situation. I see a diminishing cash flow line here. It's not such a big loss. It's coming back to normal. It's coming back to what a normal AMC would look like. And this loss quarterly is going to continue until they can afford their debt. When the cash flow is positive, they might not have as much incentive to throw a shit ton of money at their debt. And therefore, they might show us a little bit more on paper and show us a little bit closer of a company. AMC not going anywhere, folks. People still love going to the movies. People are gonna still love the movies. It's like $14 to go watch one at night now. They have all kinds of clubs and rewards and all kinds of things that you can do to make it a little bit cheaper. But AMC is still a good stock to buy in its heyday. We'll just take a look in their heyday real quick, find out what this thing has done. Yeah, back when they were profitable, this was a $17, $18 stock. After their COVID comeback, they rocketed up to 59. I don't know what this was. This was like some crazy buyer or a short getting out or something. Or a short squeeze. Everybody on Reddit was maybe pumping it to the moon. Who knows? But then it's come down ever since then, back to earth. Or back to $5. As a good company, it's worth $20 at most, maybe 15. So I don't know how much better of a company can it ever get besides the 2018 levels. They're going to have to change some things, obviously. But are they done? No, they're not even close to done. Their cash flow is almost positive. And honestly, I think that's the most important factor. That means you can pay for your debt. That means you can pay your bills. That means you're able to live and sustain as long as you want to with your ridiculous amounts of debt. And you'll throw up losses as long as you have the money for them. As long as you can continue to pay off debt, you'll have more and more and more losses. So I think a lot of this was paying off shit to get rid of and through COVID. And that's what all of this is all about too. But if you notice, that number is shrinking annually. And the revenue is about to where it belongs. So that's it for my video on AMC Entertainment for today. I'll bring you more news and updates as I catch it. Yeah, there's no real big news. Well, there's huge news all week of them buying National Cinemedia. I don't really think that's going to happen. They already have their own company, or they do it themselves, showing commercials before the movies. They don't need somebody else's business to show commercials during the movies. I think they're needling Regal, and that's about all it is. And that stock's just going to fall back down to 10 cents where it came from. AMC Entertainment, everybody. Please like my video and subscribe to my channel for continued updates on AMC. Thank you very much and have a wonderful day.